Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 20th of November, 2015, and we had a real strong week for equities again. So this market continues to just really bounce around back and forth, but we are back up close to 2% year to date for the S&P 500. Russell 2000's been a little bit of an underperformer, down 2.5%, and Biotechs up 10%. Oil continues to decline, and let's take a look at the charts to make some sense of it all. If you attended the webinar on Wednesday, you know that I changed charting programs, and from here forward, I will be using TC2000. TC2000, as I explained in that webinar, is a program that is quite inexpensive and is available for any individual with to have professional tools for a very good price. So take a look at the link on my email if you're looking at it there, or on the website. If you're on YouTube, please go to alphatrends.net. We'll take a look here at the S&P 500 on the weekly chart. You can see that this week we had gotten down last week to this prior important area, and this level is has been support and resistance. Let's just clear that off and make it a little bit tighter. So we've seen support and resistance in this area, and now obviously this week, after a big red bar last week, we had seen a bounce from that level, and now we are showing support in there. So that's going to be a very important level going forward for the next couple weeks, and it occurred above the rising 50-day moving average. We know that we've had a lot of horrible headlines in the news lately, and the market has been very resilient, and that's the hallmark of a bullish market that can shake off bad news and instead turn prices higher. So we were looking at some levels this coming into this week, like the Fibonacci off of this level right here. We came right down to a 50% retracement. We also spoke about the volume weighted average price from that low, which we had hit almost with exact precision as well. And these tools I will show you here. Let me just bring this over a little bit. I don't want to waste space on the video, but these are the tools that I'm using over here on the right hand side, and you'll be able to see how easy it is to add a volume weighted average price since an event, for instance. So if we talk about, let's see, race style, that stuff, I just grab this little anchor tool. This is the volume weighted average price anchor. I click on it, and you can see that's exactly where we found that support. This is the Fibonacci tool that I just drawn in. So we just take it from that low to this high, and this package you can get for $45 a month. If you sign up using that link, you'll be able to get the exact layout that I have here with all these tabs and all the moving averages attached to them as well. So feel free to sign up and email me about that. Anyways, let's continue to take a look at this market here. Going into this, excuse me, for the last couple days, we had been finding a little bit of resistance here. And as I told subscribers that, this was bullish because it was a correction through time rather than a price pullback. I was mentioning that if we pulled back down towards 207, that would actually be a preferred scenario, because in that case it would have been able to build a little bit of energy. But we continue to we gapped higher today, and if we take a look at here we've got all the pivot levels. Let's just go down to a 1 minute time frame for now, and we'll look at just today. So just today, here's our volume weighted average price for the day, and you can see we did close below it, but just pretty much at that level. So going into next week, we're above a rising 5-day moving average, and we're innocent till proven guilty. This market, it's the correct way is to be on the long side. When we're above a rising 5-day moving average, we will see pullbacks, and those pullbacks, if you're an aggressive day trader, I think they're okay for day trades. Just as when we're below a declining 5-day moving average, you can day trade long if you're that type of trader. But we turn from a negative environment to a more neutral environment back to positive here this week. So we have higher highs and higher lows. We're innocent until proven guilty. If we see a pullback, ideally we'd want to see it hold, somewhere in around this 208 level, and perhaps that 5-day moving average can kind of catch up to it, and then we can continue to see that this market can build energy for further upside. And next week is a holiday shortened week, and it's typically a seasonally bullish time of year. The Nasdaq is up close to those highs again that we've seen just a couple weeks ago, and this was a pullback within a primary uptrend. We have a rising 50-day moving average. If we take a look at the volume weighted average price since that most recent low, we'll just take a look right here, and you can see that we came close to that. We can also take a look at the Fibonacci in here. I'm sorry, yeah, the Fibonacci, and you can see that this pullback wasn't as deep as the S&P 500. We only made it back not even to a 38.2% retracement. So this market obviously a little bit stronger than the S&P 500, and we've got the level that we want to see hold, I think, is right around in here. If we can hold basically 112.5, 112.75 on any pullbacks, then we would want to see that this market can continue to move higher. The Russell 2000 has been a little bit of a laggard, and as we had just mentioned, the Russell is down 2.3% year to date. So we can see that here on the 30-minute. I'm sorry, this is a 1-hour time frame, but let's take a look back it up to a daily time frame. Like these other markets, we had seen that we had broken the downtrend line here and pulled back to the 50-day moving average, and it's nice to see that this prior important consolidation level did in fact hold its support. But now on a shorter term time frame, we've got this level up in here that is, so far today did show a little bit of resistance. So the ideal scenario, I think, would be maybe we see a little bit of a pullback, maybe even do something like this, and then come up, build some energy, break that level, and then it would be suitable to be long with a stop underneath a higher low. So we want to anticipate all the potential scenarios. We're not trying to make predictions. We're trying to say, here's the ideal scenario that we could get involved in this market on the long side with a low risk place to put our stop. And a scenario like that would be a good way for this market to turn bullish. That way we would see this the 5-day moving average maybe catch up a little bit. And again, even a slight lower low and then push higher would be a really nice way for this Russell 2000 to get a little bit of energy and see if it can go back up to this prior level that was resistance a week and a half ago at the prior support. If it can do that, then this market will be turning as well. The semiconductors, let's take a look here. We, similar to what we just outlined in the Russell 2000, we broke that downtrend a while ago, but we've been holding up much nicer. I pointed out that, first we found support at the rising 10-day, then the 20-day, and now the rising 50-day moving average, and that's often the way it works in a bullish environment that we see that happen. By the way, I haven't mentioned it here right now, but we can also, take a look, of course, at the volume weighted average price year to date, and if we wanted to, we could just kind of click that on there, and what you'll see is I can right click, edit this, and then apply it to all symbols. So now when I click on the SPY, which I have just a list of stocks over here on the left, so when I click the SPY or the Qs, and I realize that just kind of bunched the chart up, that you'll see we have on here the year-to-date volume weighted average price. So let's just click that on that once again for the SPY. So you can see on the SPY we've got the year-to-date volume weighted average price down at about 205, and the Nasdaq, it's down at about 10. What is this? Let's see. We've got this crosshair tool 106.75. The Russell 2000, it's right up there at that level where we found resistance at the prior support. So that adds further significance to that 120-ish level. The semiconductors were back above the year-to-date volume weighted average price, and this market is being, still controlled by buyers. Now, I think that, for this semiconductor, and I didn't mean to use that tool, I grabbed the wrong one. So, for the semiconductors, we broke another intermediate term downtrend, but most importantly, what we had accomplished this week is that this semiconductor group had gotten back up above this level here, and this level, which we were kind of trapped under, the market broke out beyond that, pulled back. The 5-day moving average had a chance to flatten out, and then we saw a higher high above that flat to rising 5-day moving average, telling us that the buyers were back in control, and they will remain in control as long as we have that. I think that as long as we hold above about 54 to 55. 34.25, you can expect the buyers will remain in control. Now the biotechs are a little bit different. We had some important things happening here this week. Let's just zoom in on it a little bit better here with the daily chart. And this is the trend line we've been observing, and you can see we've broken that trend line and now closed above it for the last 3 sessions. So that's a positive, but breaking a trend line doesn't mean reversal. What we need is higher highs and higher lows. So to really say that this market is turning back up, we need to get it back above this prior little band of resistance in here. So for these semiconductors, let's just erase all that. I'm sorry, the biotechs rather. And let's take a look also at the year-to-date volume-weighted average price, which if we back it up in here, did I delete that off of there by accident? I think I did. So we'll just draw it in here. We'll just simply click with our mouse there, and you can see that the biotechs, we've got more importance assigned to this level because this is the average price that the biotechs have traded at for this entire year, which is rapidly coming to a close. So, for the early part of next week, what we really want to see is the 330 to 332-ish level hold. If we can hold a support there and do some more, testing of this resistance, maybe something like this, then it puts us in a nice position to break beyond that year-to-date volume-weighted average price, which is, of course, also these prior highs. And then if we can do that, we would have a nice low-risk entry point because we would be able to put our stop underneath the most recent relevant higher low, which ideally would occur somewhere in there. We're not trying to predict, like I said, we're trying to anticipate. Apple made some significant moves this week as well. If we take a look at this daily time frame, you can see on the, we've been referencing in here the, what's really been important was the volume weighted average price since the earnings report 2 quarters ago. And we came down and tested that level. That's approximately where we had that 50-day moving average as well. So we came down into that level, and you can see we got back above it. Now, since the most recent earnings report, just about a month or so ago, we just got back above that on Thursday of this week. So clearly, the buyers are showing their resilience in shares of Apple. And now I think that, again, we've got a higher high above a flat to rising 5-day moving average. Intermediate term trend is higher. We want to see it hold. The ideal scenario is that we want to see it hold above 117 to 117.5. If it can do that, then it should be able to add gains. Keep in mind, however, that where the resistance had been found on the most recent drive was at the level that we were looking for it to potentially find that resistance, and that is at the prior area of support. So this prior support in here, which was tested numerous times, became resistance, and that's a potential level where this market will slow down again. So it's not bullish on all time frames. I'd say the longer term time frame, it's still kind of proving itself in here, and it's more intermediate term. I had mentioned on the Twitter and that today that shares of Callaway Golf look like they're setting up nicely. I mean, if you look at cup and handle in here, you've got this nice cup and handle that formed at the beginning of 2014, and you back it up to a monthly time frame, you can see in here when we just kind of draw a horizontal line across that this prior, that this has been the important level of resistance going all the way back to 2008. So certainly breaking beyond that would be a significant event. And looking at a chart, you would think that it has the potential to maybe make it up towards about $12 a share. So the question is it a low risk idea based on the way you look at stocks? Well, we've seen that we've pulled back in here. We had a significant event with this move in here with expanding volume, and then we've seen subsequently a pullback. So drilling down now to a 30-minute time frame, what we just erase all that to get it off of there. We have a 5-day moving average. Today, what we did was we made a higher high above a flat to rising 5-day moving average, telling us that the intermediate term trend, the buyers have regained control by getting above 991. Now, the question is, now that we have a higher high and higher low on the intermediate term time frame, as we do on the daily time frame and as we do on the weekly time frame, and we're about to on the monthly time frame, with all these trends aligned, Is it a stock that makes sense for you personally? I'm not here to tell anyone what to do, but to point out opportunities. If you're an investor, I think it's probably a better stock because it seems like a slower type of mover. But if you're an investor, I think that your worst case stop goes down here at about $9 and what does that say? Probably about $9.50. Or you might want to put your stop underneath this higher low, or if you wanted to keep a tighter stop right under here. The way I suggest to people as well is that sometimes maybe put a stop on a third of your position there, another third there, and then let's say it comes down, gets down to not shaking you out of the final third, and then goes on to $12 a share. You'll still make money, but the fact is, you've got to play a strong defense based on your definition of the time frame, whatever suitable that is for you personally. And that's what I do each day, is to try to help subscribers at Alpha Trends find the ideas that are most appropriate for them. I don't tell people what to do. I give them ideas and say, now make the trade your own. How does this fit for you personally? Do you have the patience to hold it for a year? Is there something here about Callaway? Are they selling more golf clubs? Either way, it looks like it's ready to drive higher. Hope you guys had a good week, and I'll talk to you next week. Thanks.